So we see that the reason why people are not able to travel is because all kinds of restrictions being imposed, closing of borders and all that. So as I mentioned, in January, or rather in April, we were carrying only 11,000 people. But as we see the borders being open, especially from Singapore, and also major markets in the world, Europe, US, around Asia as well, we see strong pickup. So by the time we reach March of 2022, we were carrying in that month about 900,000 people. And when Singapore announced further easing of restrictions, removing of, opening the lane to all travelers, all vaccinated travelers, and removing all test requirements, there's another big jump. So in the month of April itself, we carry close to 1.5 million. And looking forward, we continue to see very strong booking momentum.
How much clarity do you have beyond this year? I mean, 61% capacity for June, 67% capacity for September. What are you looking at for the rest of the year and perhaps in 2023?
So we don't give projections. What is also important to point out is that we have prepared ourselves so well during the pandemic to actually put in place capacity at short notice, that we can respond to any demand changes out there very quickly. So when we put in capacity in as you mentioned, in this quarter and that of next quarter, that is because you can see that there is going to be greater opening out there, and we can actually deploy our resources where the demand is and ahead of most of our competitors. In fact, in most cases, when the borders are open, we are almost always the first airline to actually put our capacity in and to announce sales. So we are quite confident.
Can you get to pre-pandemic levels without China opening up its border?
China is obviously a very key market, especially for airlines in our part of the world. We used to serve 29 points in China, in the Greater China region. The group that is Singapore Airlines as well as Scoot. So if China is not open, obviously there will be some impact to the overall traffic for any airlines, especially in Asia. However, we are also seeing more demand from other parts of the world. And we are, in some of the cases, increasing our capacity more than what we used to serve.
Where would these places be?
For example, New York. We used to serve maximum twice a day. We're now serving New York 3 times a day and twice a day non-stop.
Earlier you talked about how you're planning to expand and to meet demand. One of the key issues is actually manpower. There's been a shortage. You've talked about how you need 2,000 more workers. You've hired 800. Where are you on that? Are you confident of, hiring the number of people that you need?
The way we've approached manpower has been very different from most other organizations going through COVID, and certainly most other airlines. We have been very proactive in managing this crisis from all angles. For example, I mentioned funding. We raised the 15 billion very early on, and were able to raise the rest of the 22.4 billion that we have accumulated since the start of the pandemic from April of 2020. With the support of the public, with the support of shareholders, and also strong statement of support from our government. So those were all positive. We reach out to OEMs, aircraft manufacturers, as well as engine manufacturers and others, to talk about deferral of payment because we defer aircraft. This again is a proactive way to manage our cash flow. In fact, we managed to defer more than $4 billion in capital expenditure. We reach out to our people to take pay cut, and they have all supported. I'm very appreciative of that. The last resort was really letting go of people for 2 reasons. One, because we know how difficult it will be for our people to get jobs during that time. You can imagine everybody was having issue with business. Everybody was closed down and so forth. And we really do not want to let our people out in that kind of climate. Secondly, we also know that the recovery will come at some point. And our people very truly is our most valuable, important asset, and we want to retain them. We are aware, of course, our investment in Vistara, and Vistara is now clearly established as the leading full-service carrier in India.
What is the kind of growth you're anticipating for a market like India?
It is going to be the third largest market in the world. I'm not talking about in Asia, in the world, and that's after China and the United States.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Mr. Goh, there's some concerns about the quality of pilots. In fact, the Qantas union chief has come out to say that, for a company like Qantas, it takes about 25 years, as many as 25 years, to get from first officer to captain. Whereas in some companies within Southeast Asia, within Asia, it takes perhaps 4 to 5 years. I mean, what are your thoughts on it? Are there concerns to do with that?
Our pilots, many of them have been with us for a long time, and their dedication to SIA can be clearly demonstrated during this pandemic, whereby they come together, take collective pain, and retain job for everybody, almost everybody within the cohort. And that's the reason why we now still have a very strong strength of pilots to operate our planes. I think all of us within SIA know that we can only grow if the company grows. So all of us are committed to make sure that SIA can continue to grow when the pandemic comes to an end. And you're seeing that happening already.
I guess the question really is whether there are concerns about safety. And has the pandemic led to compromises to do with safety?
Absolutely not, because safety is the #1 priority for Singapore Airlines, and that has never changed, pandemic or not. So, for example, during this period, while we are operating only, let's say, 60%, we're using up almost 100% of our pilot population, so that everybody have a chance to continue to fly and be operationally ready.
You talked earlier about how it was difficult for Singapore Airlines because it doesn't have a domestic market. Has the pandemic perhaps prompted you to reassess how the business is done? Is there a need to diversify the markets? Is there a need to be in other markets apart from Singapore?
It's not something that we do not know before the pandemic. And Firstly, of course, we don't have a domestic market unless you're talking about some kind of a joint right, which is not good for the environment. So what happened is that from day one, Singapore Airlines do not have a domestic market, and we compete internationally with the best out there throughout this 75 years. What happened is that we became extremely good at international competition in terms of our product leadership, service excellence, and our network connectivity. We truly is a group with international footprint. Of course, we also realize that without a domestic market has its challenges. And that's and other structural changes that happen in the industry. And that's the reason why we had the portfolio strategy, whereby we had Scoot. Scoot, of course, is our LCC subsidiary. So we can always be very nimble in deploying the right vehicle on the right routes where the demand is either full service or budget. The other thing is our multi-hub strategy. So you are aware, of course, our investment in Vistara. And India is going to be, by most expectation, the third largest aviation market by the middle of this decade. And Vistara is now clearly established as the leading full-service carrier in India and growing very well.
Vistara, of course, is a tie-up with Tata Group, and Tata now owns Air India. Might that shape your future relationship, and might that mean perhaps SIA buying into Air India? Is that a possibility?
When I mentioned Vistara, I should have foreseen you asked that question. Yeah, and you probably know my answer, right? We really do not comment on any discussion, on a confidential discussion we may or may not have with our partner. But what I can tell you is that both Tata Sons and ourselves are equally committed to ensure that Vistara continue to grow.
What is the kind of growth you're anticipating for a market like India?
Strong growth.
Quantify that for us.
I just mentioned how fast it has recovered domestically. And I also say that it is going to be the third largest market in the world. I'm not talking about in Asia, in the world. And that's after China and the United States by the middle, or in some of the projections, even earlier, by the middle or earlier of this decade.
Mr. Goh, as you talk about expansion, let's talk about your fleet. I mean, you've placed orders for the 777-9. That delivery is not going to happen anytime soon. That's been delayed. How are you planning to perhaps bridge that gap?
So firstly, we continue to take in new modern fleet with latest technology.
And that has to do with sustainability?
That has a strong sustainability contribution because straight away you cut your emission by 30%, and in the case of freighter by 40%. And that's great. And of course, along the way, it also helped to save fuel, which again is a great thing for the airlines. And 777-9 is indeed, unfortunately, has been delayed. That's not much we can do as a customer. However, whenever we do our fleet plan, we always build in some flexibility. So in this case, while the 777-9 will be delayed, we are confident that we are able to make use of the flexibility within our current fleet to make up for some of this capacity deferment.
How might your fleet look like 10 years down the road, 20 years down the road?
We will continue to bring in new technology planes because it gives us not just about fuel efficiency, but it is also about capability, range, size, plus also in many cases, the new technology planes will bring about greater customer comfort, which of course is absolutely important for us.
So when it comes to sustainability, ESG, what is the strategy at Singapore Airlines?
One of the key contribution and most immediate contribution any airline can do in terms of reducing emission is really about bringing in new technology planes. I mentioned that we just do our own comparisons with respect to our older generation planes. Our new generation planes were 30% more efficient. And our average age in terms of the fleet size for the group, we are looking at about 6 years. That compares with industries of more than 15 years. You just can imagine how much emission we would have reduced by.
A net zero world is also impacting the way people fly, especially the corporate world, business travel. In fact, a lot of companies are trying to cut their emissions by half by 2025. How is that impacting, I guess, corporate travel demand for you, and how are you looking at that?
We have been very proactive, actually, in communicating all the sustainability activities to our corporate. And we have been emphasizing what tangible steps we have taken. A very tangible one, as I mentioned to you, is our new technology planes. In some sense, if you were to take an SIA plane to a destination relative to somebody else is operating old technology, straight away you have immediate contributions to reducing carbon emission.
So far, in terms of business travel, what kind of recovery are you seeing?
We are seeing strong recovery.
What is strong, Mr. Goh? We've seen ticket prices surging. Do you expect ticket prices to stay elevated?
There are opportunities for very competitive prices in, let's say, beyond the next 3 months or so.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
In terms of business travel, what kind of recovery are you seeing, and is that pace sustainable?
We are seeing strong recovery.
What is strong, Mr. Goh?
So just in terms of, I think it's easy to kind of compare it relative to pre-COVID. So it is very interesting. In the initial part of the opening, when we had VTL with various regions, we were actually seeing many what we call premium leisure customers who are not really traveling for business, but going onto the business cabins. And primarily because they have not seen their loved ones and they wanted to visit and wanted greater comfort and so forth. But with this greater opening, especially the removal of the need for test, we are seeing corporate bookings coming back very strongly. And by strongly, we are actually seeing the same proportion relative to leisure travel booking as what we saw in the pre-pandemic situation.
Or is it just about the initial pent-up demand?
Of course, there may be some of that, but business travel, corporate travel, usually also grow in tandem with economic activities. And our part of the world, you're very familiar, is projected to actually grow faster than many other parts of the world around, many other countries around the world, many other economies around the world. So with that, we expect the business and corporate travel to pick up as well.
It is a challenging environment, even as the aviation sector recovers from the pandemic. We have oil surging and expected to stay elevated for a very long time. Is that prompting you to reassess your hedging policy? How are you looking at oil?
We have seen high oil prices before. I mean, the airline industry is not alien to many of these challenges. Just about anything that happened in the world affects us.
But at a time when the airline industry is only beginning to recover and you're faced with high oil prices.
So we, of course, have our own, have our hedging that will continue to provide some level of stability up to the first quarter of 22-23. We continue to review what the hedging policy should be relative to the oil market going forward, bearing in mind that the objective has always been to provide some stability, to manage the volatility and not to try to make speculative gain.
We've seen ticket prices surging. I can testify to that. Do you expect ticket prices to stay elevated?
Ticket prices is really a function of demand and supply. And to be quite frank, some of these collections we are passing on to the oil company.
So you don't see a scenario where only the very rich will be able to travel the way we used to see, 20, 30 years ago?
There are opportunities for very competitive prices further out in, let's say, beyond the next 3 months or so. Of course, there are traditional peak period, and we're talking about June holiday and maybe year-end demand. But in between and further out, there are competitive prices to be able to be offered for customers to pick up.
Mr. Goh, the pandemic has obviously changed the way people travel. What trends do you see developing?
The pandemic has, actually at the very early stage of the pandemic, we begin to ask ourselves, what kind of changes, what behavioral, different requirements that our customers may have. And we did surveys very consistently. Two items stand out. One is the concern over health safety. And for that, our team have gone through more than 100 touch points that we have with our customers. And at every single touch point to ask ourselves, how can we enhance it so that the health safety aspects, concerns of our customers can be addressed? And we've communicated all that to our customers, and that have been very, very well received. So the other aspects is really about seamless travel. That is related to all the frequent changes in border restrictions, in test requirements and all that. And they created a lot of frictions for our customers. And again, here we try to work with authorities, work with our airports, our partners, to reduce that frictions and to try to make it as easy as possible.
What has been the biggest challenge as the CEO of Singapore Airlines over the last 2 years?
I would say two things. Right at the beginning, it's really to ensure that we have enough cash to survive. It is a survival issue. And I certainly do not want to see Singapore Airlines declaring that we have to go bankrupt and so forth. That's one. And fortunately, we're able to address that quite early and provided confidence by the financial markets in general. The second thing, which is, I would say, the most painful decision that I have to make, is about letting go our people. We had to let go almost 2,000 of our people. It was very painful. We tried to delay as much as possible. We reduced the number as much as possible. In fact, as early as February, because we were anticipating that there could be a slowdown in the environment, in the aviation market, we decided to stop recruitment. So we let natural attrition to take place, and we didn't do the actual retrenchment until September. So those were very difficult decisions.
Mr. Goh Choon Phong, thank you so much for your time today. It's been a pleasure.
Pleasure. Thank you again for having me.
At GIA, we grade some of the rarest, most precious diamonds in the world, including yours. Feel confident you're choosing the best with a diamond graded by GIA.
Policy rates are still extremely low relative to the rates of inflation. And so at the end of the day, it's certainly not an early 1980s Paul Volcker kind of a situation that we have in the United States where they're moving aggressively to just sort of squeeze inflation out of the system.
Nick Benabrook of Wells Fargo. Nick, thank you. Just want to reset for people just tuning in. Rates unchanged at the ECB, but a ton of guidance. We got some new forecasts. They had to hike their inflation forecast. They had to cut their growth forecast. This market behaved like it was actually reading the statement, which is good news, because initially the bond market was pretty contained, because the first line of the statement, asset purchase program details come before rate guidance. And on asset purchase program details on the end of QE, they baked in some flexibility, this idea that they can address fragmentation with maturing, the reinvestment of maturing assets. But then you get down to the rates line and things start to get more interesting. They're looking to hike rates next month.